Hey guys, so I just wanted to make this really quick video, very unscientific, unlike my other ones, just to kind of calm everybody down and to talk about Brexit from a trader or investor point of view. So, as we all know, yesterday Britain left the European Union. I'm not going to go into a big fundamental analysis about this, but from a fundamental point of view, I really don't think it's going to be as dramatic as people are saying it's going to be, but I also want to talk about this from a technical point of view. So, what you're seeing in front of you, if you're not a trader, if you're new to this and just stumbled upon these videos, is a chart of the S&P 500 going back a little over a year, right? So, this is an ETF, it tracks the S&P 500 one for one. So, when people talk about the market, they're usually talking about this right here. Um, and although we can see that yesterday was not a great day for the market, if you really sit back and look at it in the grand scheme of things, um, really, what do you think it affects overall, right? And that's kind of the point that I wanted to put is, so we see this candle, and each one of these represents one day going back a year. Get it here. Um, is bad, right? We were up here, Brexit came out, we were down here. But if you look at where we are, we were here on, I believe, May 19th, and then we were here on April 7th. So, you're seeing things, and this is why I wanted to make the video on my Twitter and my LinkedIn and CNBC talking about, the market crashes, all gains of 2016 are completely erased, and it's just not true. You know, um, it's sadly just not the way it's actually happening. So again, this bar here was yesterday and it was Brexit, right? You can see that we have been here many, many times throughout the past year and a bit. You can see we haven't really done anything in the last year and a bit, but we're still in the top end of the range, right? We had a big gap down like this, these two, in January, February, right? If you look at what happened here in August of last year, it seems much worse. So again, I'm not making any future predictions for the market. I'm not going to talk about the fundamentals behind it. I'm not making any trade suggestions on what to do from here. But from people I've been talking to and rooms I've been hanging out in and Twitter and LinkedIn and all this stuff, this is just blown a little bit too much right now. So if you're sitting there and you're on YouTube and you Googled Brexit and this thing popped up and you're trying to figure out, oh my God, what do I do? Just look at what we've done in the past. Just look at, again, this is a little over a year. We've been all the way down here, all the way up here, all the way back down here again, all the way up here again. And, may we go back down here? Maybe. Could we go lower? For sure, we could do anything. Or could this just be a shakeout for weak hands? Could it be just, the I've heard it called the financial media complex, which I think is a hilarious term for it. Could it be this is their time. This is their time to make ad revenue, right? This is their time to bring in viewers. This is their time for fear. We remember the swine flu back in the day. Everybody was freaking out about it, and it was nothing. It's every time something happens, there's been some financial cliffs that are freaking out and nothing happens. And then there's been some, every time there's a big news event, it scares everyone and the market gets really volatile. And really, it's great for traders. But if you're an investor, if you're a swing trader, you should really just sit and wait. You should just let the market digest this news and see where we go. Just don't react. The other thing I wanted to do is I wanted just to show you kind of the grand scheme of things. Again, everybody's worried about the end of the world and this and that and the other thing. But I just want to show you, this is where we were in 2008, 2008, 2009, when things were really bad. We were down here. You can see we've just run up forever and a day. It's been 8 years from that, and we've pretty much been straight up. So could it be time for a little bit of a down move and digestion? Yes. Again, I'm not trying to, this video is not to predict what's going to happen in the future. It's just going to try to keep cool heads about what's happening now, right? So if this is your obsession, if you're trying to figure out what to do with your retirement and what to do with your investments, I would just wait a little bit. You've got room. Keep an eye on, you can go to this website, TradingView. You can type in SPY, and that's the ticker. And you've got until this area, until things get really bad. So there's time, there's space. This is not unprecedented. We can see in the last year, we've had moves like this fairly frequently. We've had big down moves here. We've had big down moves here. It's just trying to, I guess, in what I'm seeing as the world is people freaking out and, trying to get ad revenue and views and all of this stuff from this event. And the pro traders I talk to, the investors, the hedge fund managers, they all talk about how they will not react based off of one event. There's no billionaire out there who's watching CNBC and hitting the sell button because they reported bad news, right? So take your time, digest it. We'll revisit it in a week, maybe, see what happens next week. I think will be very crucial for the market. Kind of see what happens at the end of the week, come back to this chart, reevaluate when heads are a bit cooler, right? There is no good decision ever made when you're really freaked out. So anyway, I hope this helps someone. Again, I'm not trying to predict anything here. I'm just trying to be a bit of a voice of reason in the chaos. So until I talk to you guys next time, trade safe.